Hi there, Serial Trader here. I'm going to take a look at the major US indices and just looking at SPX here. So since the last video, I believe we were kind of sitting around this upper boundary line of this proposed base channel. Well, we cleanly broke out of that, had some follow through, and we actually exceeded that 1-6-1-8 relationship for 1 versus 3, and we exceeded the prior resistance level for the X wave of this proposed double zigzag wave 4. So I think at this point it's pretty much in the bag that we have the correction complete that started in January 22 and ended in February on the 24th there, the day that Russia invaded Ukraine. That did in fact mark the bottom. So I think the wave 4 is in place, and that's the wave 4 off the overall sequence for the March 2020 low. And I think we got the 1, the 2. Now here's a little bit of debating of the subdivisions. It's not directionally that important, but for shorter term position, I guess it would be a little more significant. So we could already have the wave 3 done. Okay, so this could already be done here, and we could be in the wave 4 and looking for this wave 5. That's certainly possible. What I'm kind of leaning on currently is that we're still developing in this wave 3, and maybe we've done 1, 2, 3, 4, and still 5 of 3 to come, and then we need the 4 and the 5. But either way, I think we are in a new impulse wave off of the February 24th lows, and that will lead to, well, higher highs and eventual new all-time highs. And then at that point, we'll have to reassess the situation. But if we go to the weekly chart, say, and let's have a look. So weekly view. So I think we're in the 1, 2. We did the 3, 4 is in place. Now I think we're working the 5, and we may be just working 5 up off the bottom for the initial 1 of 5, right? And in fact, if 5, let's just throw a quick target out there. So if wave 5 is just simply equal in length to wave 1, which is reasonable since wave 3 is a little bit longer than wave 1, that would get us up to 55.1090, so around 5,500 on SPX. So just something to keep in mind for the coming months, that we're probably going well into the 5,000s before we actually should be looking for, the big one, the big top, followed by the big drop. But yeah, not yet. For now, we are nursing this new impulse wave off of our recent correction lows there. Okay, well, I don't think there's a whole lot more explanation needed. I mean, again, even this, we could be still in the wave. This could just be A, and we need the B, and then C of 4, of the of the 3, with 5 of the 3 to come. I mean, there's so many short-term nuances, different ways you can chop this up that are valid, that I wouldn't pay too much attention to that. I would just basically view all pullbacks as potential buying opportunities for the eventual higher highs that are likely coming. So however you want to slice up the short term here, I don't think directionally it's going to make a large difference if you're taking a multi-week or even multi-month approach to what appears to be a new uptrend in progress here. Okay, so that's all I need to say about that. And looking here at the candlestick chart of SPX, we did do a bullish hammer candle on Friday, and we closed above the T line. We did get a little overbought on the oscillator, came off that overbought condition a bit, but that doesn't have to mean much. You can get overbought in an uptrend and then just kind of hover near overbought condition for quite some time. So I wouldn't put too much into that. We are above the 200-day and 50-day moving averages again, and looks like the 200-day is still pointing slightly up. The 50-day might be getting ready to start curling back up. The 20-day is certainly curling back up. So things are fairly positive as far as that orientation goes. Weekly chart on SPX just had a bit of a indecisive week. We did go higher, but then we closed only slightly higher for the week. Maybe a bit of a doji star candlestick on the weekly. We did get not even quite to the weekly oversold condition on this oscillator, and now we're coming up strongly off of that. So overall looks fairly constructive. Okay, that's SPX. If we go to the Dow Jones Industrial Average, similar look. Got the 1, got the 2. Now again, debating whether wave 3 is in place and we're working the wave 4, or whether wave 3 has a little bit more to go before the wave 4 comes, similar to the S&P 500. Similar, but not maybe identical to it. But certainly directionally aligned. Not much else to say about the Dow. Again, we just had a 3-wave decline from the all-time high, and now we appear to be working a new uptrend off of that. Weekly chart on the Dow. Anything remarkable about that? Not really. Again, kind of a doji star week on the Dow as well. Okay. Go over and have a peek at the NASDAQ composite. So the NASDAQ's a little different in that it made its lows at a later date than the S&P did. But that being said, I think we're just working the initial impulse wave off those lows, and I think we have a completed correction in the NASDAQ composite as well, from the all-time high to the recent lows there. So again, directionally, I think it's aligned with the S&P. Okay, on the weekly on the NASDAQ, anything there? Not really. Maybe a little inverted hammer, potential reversal on the weekly, but again, wouldn't put too much weight into that. Okay, that's the NASDAQ. Now if we go over the VIX, VIX has certainly been declining, and that is overall a bullish condition for the market. And VIX still looks to be in a fairly sustained downward slope. Not really much here suggesting a big VIX pop is coming as of yet. We're back below the 200-day moving average on VIX as well. So that's fairly positive. We're back below 20. That psychological level of 20 on VIX. So overall, this is looking fairly positive for more upside in the market. And if I go over to the VIX VVIX tool, what do we got going on here? So we did have a recent sell signal. Not a strong one though. Wasn't really much of a VIX VVIX divergence, and then VVIX did get above the red moving average, but not in any kind of meaningful way. SPX is currently below the blue moving average, but again, doesn't look like we're getting a whole lot of follow through to the downside. Probably just a little fourth wave, lower degree fourth wave. So I would lean on SPX just resuming its uptrend fairly soon here, and things to look for is VVIX getting back below the red moving average, which it's not far away from at all. And SPX getting back above the blue moving average, which is currently around 45.75. So maybe, I don't know, 30 points away or so from Friday's close. All right, well, that's probably all I need to go through this round. But yeah, bottom line, I think we're establishing a new uptrend. And if any previous uptrends are any indication, pullbacks will probably be relatively mild, and short in duration. So I think a bullish oriented mindset is in order for a while here until something else changes. All right, Serial Trader signing off.